Hello, welcome to the weekly technical analysis review for Monday, December the 12th. I'm FOREX at XM.com, and this week we're going to be looking at the dollar yen, the euro yen, and the Aussie dollar. So let's begin with the dollar yen pair in the daily chart. Looking at the momentum indicators, we can see stochastics point to plenty of positive momentum in the very near term. Looking at the MACD, though, it has been making lower highs, and that's indicative of loss in momentum, and we can see that through price action as well, because prices have slipped below that uptrend line that held until November, and now we can see they're making another attempt to break above that uptrend line. That should provide resistance just below the 110 handle. So if there's a continuation of the upside momentum, we could see that breakthrough happening, and then after that the next target would be the 78.6% Fibonacci retracement of the downleg from 112.39 to 104.44. so that is around 110.69, and then above that the next big target would be the 112 handle. But if prices are unable to rise above that uptrend line, we could see prices drifting back down towards the area between 8.40 and 109, which has been a heavily congested area recently, and that's where all the moving averages are currently converging. So that could possibly provide a strong support region for dollar yen, but if prices were to slip below those moving averages and below the 50% Fibonacci at 108.42, that would risk altering the positive medium-term outlook to a more neutral one, and possibly we could see the start of a downtrend, and then the next target low down would be the 107.48 area, and at the 38.2% Fibonacci. Let's now turn to the euro yen pair. The short-term indicators are positive. RSI is rising, so is the MACD. Though RSI is just at the overbought level at 70, so that could suggest that the current upswing is probably could soon be running out of breath, and we saw prices briefly spiking upwards before retracing a lot of those gains. So we did see last week prices breaking above the 38.2% Fibonacci to make a 5.5 months high of 122.64. so that's the Fibonacci retracement of the long-term downtrend from 133.12 to 215.85. And if we do see another attempt to break above that level, the next target would be the 123 handle, and then further up we've got the 50% Fibonacci at 124.49. If we were to see prices drifting lower, immediate support should come at the 200-day moving average at 121.28. so that's also where the 10-count trend line currently lies. Further down we've got the 120.50 region, where the 20 and 50-day moving averages are converging, and below that we've got the Ichimoku cloud. If we do see prices breaking those moving averages, and we could then see decline as far as the 119.25, which is the bottom of the Ichimoku cloud, and also was a previous swing low. At the moment, though, the medium-term positive outlook still holds, and we can see that the moving averages are still rising, so it's looking fairly positive both in the short and medium terms for euro yen. And finally, moving now on to the Aussie dollar pair. So the Aussie dollar has also been looking a bit more positive lately. RSI is slightly ticking higher. Though looking at the stochastics, they could possibly be warning us of a downside correction. We see prices struggling to break above the 200-day moving average, and we did see a brief spike above the 61.8% Fibonacci retracement of the downline from 0.7081 to 0.6670. So that's around 0.6924. So if prices are unable to break those barriers, we could see the immediate support coming from the long-term downtrend. So the fact that though they did manage to break above that downtrend line recently does suggest that the pair is now possibly shifting to a bullish outlook, having been neutral for a while after we saw that long-term downtrend coming to a halt when they hit a 10-year low. But we would have to see prices reaching at least a 0.70 handle, which is just above the 78.6% Fibonacci, in order to get more of a confirmation of that possible new uptrend. But if we were to see prices slipping back below that downtrend line, the next target for the bears would be the 38.2% Fibonacci at 0.6827 before aiming for the 0.68 handle. So that's it from me. Thank you very much for watching, and have a great day.